Hi and welcome to this Blueberry Markets video update with me, John Kibler, Senior Market Analyst. Today we're just going to go over some currency strength and weakness. We're going to have a little look at where to potentially focus some attention going into this trading week, a week which is yet again kind of taken over by the Treasury market. There's a really good article here over on Forex Live talking about how long end treasuries still sending warning signals. What they're basically talking about here is, if we go down to our bond yields, is that these bond yields on the long end, so they're talking about the 30-year yields, are continuing to remain fairly high, and that can be sort of detrimental to what happens next in the US. But what we don't typically see is that bond yields move, well, they are meant to move typically correlated to currencies. However, at the moment, we're seeing the likes of the 30-year yield rally, the 10-year yield rally, yet the dollar is still weaker. And that's kind of seeing that continuation, dollar being pushed below that sort of 99 barrier now. Whether this is going to suck in a few people before a larger term rally, we don't really know yet. The market is still basically not trusting the US, and that's what this is kind of showing at the moment, where the market is moving out of US dollars and into other assets. So we could see a move down in towards these kind of 96 areas for the dollar. However, if we go take a look at currency strength and weakness, this is reflected. The US dollar is the weakest currency at the moment. We are at -7, so we're in that kind of realm of this is super weak, but also could start to reverse because it's almost in that oversold territory now. So we have to be a little bit more careful with our dollar plays. That being said, that is the weakest currency at the moment. The strongest are the Swiss franc and the Japanese yen. So that's showing us that there is safe haven flows, because the Swiss is the strongest currency. Also, the yen is the second strongest currency. However, the flows aren't being felt in the US dollar, which is telling us that this is a US situation right now. This is a US problem, because if we look across the board, Aussie has rebounded from those lows. Kiwi has rebounded from those lows. So Kiwi was actually one of the strongest currencies. So really speaking, if we're going to pair strong against weak right now, the one market that we should be looking at is New Zealand US dollar. And this is a market we actually spoke about a long time ago. Back in the end of December, we were looking at potential reversals in this market, because there was a commitment of trader report signal highlighting that this area here, let me just grab a brush, this area here held a COT signal, extreme levels of selling from the hedge funds, extreme levels of buying from commercials. Now, the market did rally and we did buy into this move up into the 58s, but I didn't feel comfortable being a buyer unless prices breach 58. And we've had that last week now. Last week we had the confirmed close above that. We've broke above this 50 moving average from a weekly perspective. On a daily chart, we've broken that. I just haven't had any sort of pullback here. And that's something that with my strategy I need to look for. So we've kind of rallied up. If we get some kind of retracement here, maybe we're going to see some further upside for the New Zealand dollar. However, dollar might be a tricky area to trade. So we might want to go and look at some other currencies that are getting a little bit weaker. The pound is at -1, for instance. So maybe we can look at pound Kiwi or even pound CAD, because CAD has been getting a little bit weaker because of the recent moves as well in oil prices. So if we go down to our Kiwi pairs, we've got Kiwi CAD here. Now that's starting to break to the upside. We had this nice area of consolidation. The market broke above that. You can see I've kind of mapped out that area. The reason why I've mapped that out is because of, if I just pop a little volume profile there, you can see that this was a large volume zone. Price has breached it, retested it, and is now continuing up to the next level of resistance. But, you know, again, we didn't really get much of a pullback here. If anything, it was a consolidation breakout, and the market has continued higher. So again, I would need to see some kind of, you know, maybe if we get to these highs, market kind of pulls back a little bit, and then we see a continuation to the upside. If we look at pound Kiwi, I like this structure play in here at the moment. We've breached in at this 2.24 area. The market's kind of come back, retested that. Looking at the 4 hour time frame, you can see that we're starting to nicely about to make a new low here. lower low, lower highs. So I'm watching for further downside here. Daily chart is below that 50 moving average now. We have lots of support down towards the kind of 2.2 levels and 2.17. So for me, Kiwi's the market to look at the moment. If we're going to look at a kind of super reversal, potentially, you could look at Kiwi, Swiss, Kiwi, Yen. I do quite like the idea of the Swiss franc starting to sell off. If we look at the Swiss yen, markets coming in lower. So what we've actually seen is that over the two safe havens, Swiss has been outperforming the Japanese yen, but right now we're starting to see a little bit of an unwinding of that. If that continues, then maybe we can see a little bit of unwinding of the Swiss franc. So let's have a little look to see if we can get some kind of changes of structure here. At the moment, we're kind of capped at this 49 handle. So if we can breach that, then that could maybe mean some upside as well in the near term. If we do see that kind of roll reversal, as there's a lot of resistance up towards that 0.5 handle, which could be tested. So just a few ideas from the currency strength meter there. Hope you have a great trading week, and I will speak to you in the next one.